you might have to take the lead a little bit, because I mean, I've been plugged in, but I've been a little bit out of play with sort of overnight news. Let me just make sure we're live here. One moment. Okay, awesome. Right, we are live. Cool. Let me just put out a notice to people's. All right. You got the link, Stephen?
Not yet.
Okay, I shall send this to you, sir. Happy Tuesday, guys. You're joining us. Hello, hello. I'm hoping I've got the right thing running. Uh-oh. Oh no.
Is it working?
Oh, we've got two. We've got two live. Okay, we almost got it right. I've got two live right now, so I'm just gonna have to sort one out. One moment. Let me just cancel this one. Hey guys, people are probably confused because there's people watching the one that's not where we're
Live.
Yeah, so I'm just gonna. Don't know what's happened there, but we'll get it. We'll get there. We're close. We are getting closer.
Yeah.
Okay. Right. Let me. Okay, this is the link. I'm giving it to you now. All right, guys, we're going to start in 2 minutes. Just share Stephen the link. Whoa. I hope I sent out the right link to people. Okay. There. So you got it, Stephen?
Yes. Let's take a look.
Whoop, whoop.
Yes.
Bosh. All right. Cool. We're in business.
Yeah, I can see it.
Cool. Yes, baby. All right.
Do we need to share it in Discord or?
Yeah. Do you want to share it?
Yeah, I can share it. I can do that. Let's give me a sec.
Signore. Wow. This is share my screen.
Bro, how's the weather there? It's great, isn't it?
Yeah, the weather's nice, to be fair. Yeah, I mean, I know in the UK right now in London it's cold, so yeah, it's nice here. It's warm. It's not the sun. The sun is in and out today, but it's nice and it's generally quite warm. So yeah,
nice.
I'm enjoying it, man. I love the idea of I'm being able to work outside, which is really nice. So,
yeah,
can't complain. Right, let me share my window. Wait. Let me share my window. Wait.
Yeah, I sent out a link on Discord.
All right.
Cool.
Okay.
Everything is set up.
Just
ready.
Getting all my. Yeah. So I had these. I had a couple of shorts for Euro. This was the first trade in a little while because I hadn't really traded last week. I was a bit off key because obviously I was getting ready to travel when I was traveling. But this was more or less a short. I had the one moment. I just need to clear up. My chart's really messy. You can see my chart, right?
Yeah, I can see your chart.
Yeah. So I waited for the liquidity sweep of the Asian range high, looked for a reversal candlestick, and then I'd entered on this bearish engulfing here. Usually what I like to do is I like it. I mean, you know, obviously when the bearish candlestick closes below the reversal, so for example, so this candlestick here, when the second one closes below, we'll get that clean sweep. I usually enter, and as you see, I entered there, but it's nice for me when the candle is not so bearish because it gives me greater risk to reward, because I place my stops just above there, the high. So anyway, I had initial intraday shorts which hit at 15s at 115. It's just paying attention to the higher time frame analysis, and on the monthly we had obviously come to this very key area protecting mid 96 region, 96.50. So you can see in June, you can see in July, and obviously we had this reversal candlestick there, this doji in September, and then obviously October we validate this as being a potential reversal candlestick. We go and close above, nice and bullish, and then obviously now makes sense, we're getting that continuation and we've returned into 100. Now for me, obviously weekly structure was starting to take up shape there. You can see it really nice and clearly there on the daily with the higher highs, higher lows. And I did put something out, obviously I noted to the community the other day, is like, this was the NFP spike, excuse me, not NFP, you've got that in my head now. This was the FOMC spike. So we had Powell obviously pushing back on rate cut bets. And I think we might have even noted it in the stream that we did a couple of weeks ago, where we were saying that, look, market expectations are so freaking dovish. Like, they've priced in the most bearish scenario for the dollar in terms of all these back-to-back rate cuts. So the pendulum, as I keep using this analogy, you know, imagine a swinging pendulum. The pendulum is all the way and stuck on the most bearish case. So that means the risks are at large of it swinging back the other way. If we get, for example, a change in tone from Powell, perhaps he's not so dovish as we've seen. He dampened market expectations of more cuts because he said it's not an absolute certainty that we're going to get more. So that's why dollar has really gathered some momentum. It's starting to take some shapes. The pornography. Sorry, that's fundamentals. We're not focused on that. We're focused. It's all about dollar. Dollar's the heavyweight at present. So I just thought, man, I'm going long. I'm going short euro. I'm long dollar. So yeah, man. I don't know what your sort of view is on that, Stephen.
I agree with that. I'm also in EURUSD shorts, and I have the same target. But I entered before the FOMC last week on Wednesday. So I can share my screen. Let's do that.
All right. Yeah, take over.
Also, I've NZDUSD shorts.
Okay. Nice. So, I love those.
Yeah, man. So let's first start with EURUSD. Same thing. The structure. Let's say the bigger structure on the high time frame. Also, this is still my swing low on the daily. This is my swing high. So we could maybe, if we respect this demand zone, we could see a little bit of pullback to the upside. But if the fundamentals still support back to the upside, but if the fundamentals still support dollar momentum, then we will probably continue lower. If we break this zone over here, then we will probably continue lower from there. But as you can see over here, the structure is clearly making lower highs and lower lows. And last week on Wednesday, somewhere around here, I saw this liquidity sweep over here and continuation, big candle close. 4 hour swing fractal structure has been broken. And because I entered before the FOMC rate decision, I had a bigger stop loss. So my stop loss was somewhere around here. And my target is around here, so 1 to 2 risk to reward. Now my stop loss is at break even, but this is similar to my trade what I executed. And that's also everything you said. And on NZDUSD, there's a clear explanation. The dust head needs to settle. I said that last week in the Discord. We see this big red candle to the downside. That was the FOMC. People get FOMO, right? People will get excited and get into shorts and maybe set a tight stop loss and then they get screwed. So you need to wait for the pullback, and I was waiting for the pullback the day after, and I had my entry somewhere around here, and my stops also a little bit higher, and I am aiming, let's see, 1 to 2 risk to reward somewhere around here. So this is my target. Yeah, I have two trades running at the moment. And I said we are saying this in the Discord for over a couple of weeks. Let's say the October, yeah, 2 weeks. 2 weeks. This period of consolidation has happened, and we are saying just wait for the next low high. We can jump into the low high and then continue with the trend to the downside, and that's what's happening.
And bro, we've been calling. Steve and I have been NZD bearish for all right. We obviously we gave our outlooks for I think in the month of September. It must have been September. We give our outlooks on currencies and we rank them. And Steve and I both had NZD calling NZD as the weakest currency or the most vulnerable, the one that's subject to most selling. And obviously we have seen that. If you look at NZD across the board, generally speaking, we've been hit hard. It has been. I need to check the actual facts, the figures, but it's definitely been one of the weakest. And me and him were freaking talking. Stephen, we were before, weren't we?
Man.
Were we not? Were we not prepared for this?
Yes, man.
Right? So, this is the end of the day with this. It's not even. We're not producing some sort of magic. We're just doing the groundwork. We're putting all the pieces together. We're remaining patient. We're sticking to the plan. We've had everything. We've done the 5 Ps, proper preparation to prevent poor performance. We've done that. So, and this is reflecting here, obviously, in your trade here, man. It's great. It's super patient.
Yes. Yeah.
I think, I think that's pretty clean. I think this. I don't know about your thoughts specifically on dollar, but I think this is the start of a meaty recovery for the dollar. Like, if we take out, for me personally, just on the Dixie, if we take out 101 area, even reclaim that former sort of high in the night, in May, okay, around mid-May, 19th, the 12th of May. If we break above that 101, 102 area, I think it's gonna rocket very fast in towards like 106, 107. So yeah, I'm expecting big moves for greenback, but 102 I'd like to see as the next target area. And then we break that down. And then euro, that will mean euro returning to 111, which is not out of the realms of possibility. Look at it right now. We're breaking structure. It's heavy. It's heavy.
It is. And yeah, we say it. Don't get FOMO, right? The market will not be in one straight line to the downside. It is, of course, right now it's difficult to jump in right now, but eventually you will see a little bit of a pullback and then eventually the continuation, as you saw in NZDUSD. Here's the clear example, the pullback and then a continuation to the downside.
Stop hunting. I know it's shade. Keep that in your mind where you stop with your, with your stop placement and where you're entering in the market. Yeah, man. So little adjustments. I am looking at potential. I'm going to share my screen a moment.
Yeah, man.
Let me just quickly share screen. Maybe I'll get you Stephen, if you could break down RBA, because I didn't dive fully into the RBA. I've been sort of quite busy this morning, but if you can break that down after and what it means for AUD, I just want to quickly share my screen
right now.
In a moment, I'm just going to quickly share a trade that I'm looking at. I haven't taken, but I'm just looking at. So 1 moment. Give me a moment here. Okay.
People have any questions, they can send them in the chat.
Yeah, please do. Please drop your cues. Okay, I'm sharing this now. Okay, yeah, guys, I'm looking at Euro GBP at the moment. Okay, I'm looking at Euro GBP, and before I break this down, right now, I'll talk about the entry in a moment. I haven't got it yet, but I'm looking at it. GBP quickly, guys. Very quickly. GBP is very important that we note GBP. Let me share this tab instead, and then I'm going to come back to the charts. We have the Bank of England rate decision coming up on Thursday. Okay, Now look at this. This has changed. I think markets are listening to me because last week or on Sunday in the Sunday analysis, I was talking about this in our week ahead because this was 8-1. This was 8-1. Stephen, what's unemployment rate? 4.8%. This is the highest number. Unemployment rate 4.8%. This is the highest number that we've seen in a little while. I think probably. Let's go. Let's see. I'm guessing pandemic. Okay. Quite around pandemic era, 2021. So this is bad. This is not great. And then to add to that, we had the various inflation metrics, okay, from the UK. CPIs, RPIs, PPIs. CPI is obviously consumer price index, the general cost of living for consumers. It was slower than expected, okay? The core, which is most important because it strips out the volatility of food and energy prices, cooled 3.5%. Retail price index, 4.5%. PPIs, negative. So look like this, okay? Think with me. If we have a higher unemployment rate, if the labor market is cooling, we've got less people working. What does that mean for the economy? Okay, let me think a minute. Less people working. Okay, that's less stimulating of the economy. That's less spending in the economy. If there's less spending in the economy, what does that mean? Okay, it means maybe businesses that are offering goods and services are going to start to put down their prices because people aren't spending. The demand's not. What's the Bank of England now doing? Okay, Bank of England is looking at this data. All right, we're seeing a cooling in the labor market. Fine, that's not great. We are now seeing inflation start to cool. Are people struggling here? Businesses are putting down their prices. Okay, maybe we need to look at taking some sort of action. That action, what's that action? It's interest rates, right? Let's look at lowering costs for consumers. So, with everything that I've just said, we are getting closer to Bank of England rate cuts again, right? Now, this decision here, as I was just boasting about there, the expectations last week was 8-1, and I said no chance in hell. We're seeing bad numbers, okay? We're seeing softening of numbers, and if that, I was saying this is going to come out 6-3 when this was 8-1, okay? The vote in. So this means 6 members calling for unchanged, 3 people calling for a cut. So that's dovish. So what we're seeing now, when you look at GBP, is we're getting a lot of GU underperformance, and I'm really annoyed because I missed this opportunity for some shorts here because I was noting once we break down 3250, this zone here, and I was looking for that to be broken down. We're going to see a quick.
I cannot see your screen.
Oh yeah, sorry. There we go. Yeah. So I missed this trade. So yeah, and look at the structure as well. It's been super bearish. Look at these lower highs, these lower lows. It's very clean. The trend is your friend, and the macros are shifting, shaping this up. Okay. And there was another entry opportunity yesterday, similar to my Euro one. This morning, again, liquidity sweep with the Asian range high. Bam. Ding, and then selling. Boom. Sound effect. So expecting this to head to 130. And this is the change now. The market's wising up to this change, okay, in expectations for it to be more dovish and for more rate cuts to come into play. So let me get my breath back. Now, going over to Euro GBP, I'm looking at these longs now. The reason being is because of this. So obviously Euro, the ECB aren't doing anything with rates at the moment. They're unchanged and they're going to be unchanged for a little while. Okay, things are quite stable. Structure with Euro sterling is to the upside, as you guys can see. All right, we had this period of consolidation here, and now we're getting this breakout again to the upside. Okay, big extended move here on the daily. You can see really nice structure on the 4-hour. It's like a staircase. Bam, 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 bam. We had this sort of triple top here, corrected ourselves, found demand at basically around 88-ish. Sorry, not 88-ish, 87, 80, and we've had this big breakout to the upside. Now, this is what I'm interested in at this moment. I'm seeing how the price responds here. So long as this area holds, I'm going to be looking at longs. Okay, it looks like for me, I know people always say, oh, all Ken does is trade flags. No, that's not fucking true. I just mark them up as a point of reference just to understand a couple of things. One, when we're going through these periods of consolidation, right? And obviously a couple of things. One, when we're going through these periods of consolidation, right? And obviously these periods of consolidation appear, you know, as when you look on the higher time frame here, that's the next zone. Okay, that's the next big boy zone, and I think we'll be quickly sucked into there. I don't know what your view is on that, Stephen.
Yeah, man. I'm looking for GBPCF. That
Okay.
structure still to the downside.
Do you want to share? Let's have a look.
Yeah. Let me share. Let me share. Yes. So the high time frame, the weekly, the daily, you can see clearly bearish, and we broke out of this consolidation, and right now the continuation is to the downside. So we are making to the downside. So we are making lower highs and lower lows. And right now we grab this liquidity of this swing high. Above every swing high or swing low, there is liquidity called buy side liquidity. At the moment, this is my swing low, and this is my 4-hour swing high, and we are clearly to the downside. So as you can see, we came above this swing high. When we go to the 4-hour time frame, we came above that swing high, and there's a natural zone called buy side liquidity around here. Let's make another color. It's called buy side liquidity. So we grab that liquidity, and then you can see the big move to the downside. Right now, this is my bigger buy before the sell to look for a potential short. But as you can see, there is not a lot of liquidity in this leg because the continuation is very big, and the risk to reward at the moment, if I set my order right now and my stop loss here, I would not read it. It could be, but I'm looking for maybe on the 1 hour time frame, maybe tomorrow a little bit of a consolidation over here. So at both sides there's liquidity, we take out liquidity, continuation, then I'm happy to take shorts and continue lower. We could aim for, look at this, I think eventually, if it happened as you saw on the forex calendar, then maybe we can eventually target this wick over here. That would be a nice target for GBPCF. Today we had risk of environment. I said it in the Discord because risk asset, I don't know why at the moment, maybe you know why, but there's a risk of environment. So we see equities falling, we see crypto is also falling, and Aussie and New Zealand dollar is also falling, and CHF and JPY are rising. So it's a clear, typical risk of environment at the moment. So it makes sense to short this trade for now. But I am just waiting for bearish confirmation over here.
Yeah, I agree, man. Like, C8, you just if you're trying to sell the Swiss franc, like sell CHF, you're crazy. I mean, Swiss franc. We said it before, but when you look at every CHF chart, look at it on a monthly. Every single CHF chart is just one way. You know,
It is.
money never stops flowing into Switzerland. Yeah, that's an actual fact of following capital flows. All the big boys, everybody's sending their money. All the dodgy people as well, sending their money there. So yeah, it's I wouldn't be betting against the HF, that's for sure.
Yeah, man.
Just a quick one, Stephen, because someone's asking. Let's make sure I've got it here, guys. Yeah, so people were asking about the macro inner circle, saying if we can make it cheaper. We're actually running right now, like for the people that are here. We're actually running right now, like for the people that are here. We're running a free 30-day trial. So just check it out. If you want to subscribe, check out the trial. Check out the value that we're bringing. These streams that we're going to be doing. Like, this is one for everybody, but we're going to be doing these on a daily basis for the community. We'll look at AUD on the back of this RBA decision.
AUD, yeah, man. We had that today, right?
Yeah,
so
we had that overnight. Yeah, so the Fundamental Trading Club. Sorry, just quickly, someone's asking. The Fundamental Trading Club is there's different plans for the Fundamental Trading Club, guys. So that's just off record for now, off the cards. Everything that I've just spoken about is going to be via the macro inner circle. The Fundamental Trading Club is going to be a completely different thing down the line with I'll share some details on that when the time's come. But for now, everything is macro inner circle. Yeah, man.
Yeah. We had the rate decision this morning by the RBA, and after that we have the press conference. So basically, they hold their rates, and then it was highly expected. So it was widely expected from the previous data. When we go back, let's filter it for the Australian dollar. So the previous data, the inflation was higher. It was it last week, I think so. Yeah, the inflation was higher, and before that, or the week before that, the labor market was lower. So it was kind of a mixed data. But overall, they are looking at the inflation, and they expect to return the target for the inflation, but only by late next year. And the market is expecting almost no rate cuts at the moment before mid 2026. So the labor market is low, is as you can see, the unemployment rate is higher and the employment change was lower, but the inflation is higher, and the RBA is looking at the inflation rate. So the market is not expecting further easing at the moment, and it was slightly maybe a cautious, very cautious hold, and slightly hawkish hold. But when we go a couple minutes ago, we are in the risk of environment, and what assets will take the hit: Australian dollar and New Zealand dollar, Canadian dollar, crypto indices, because they are commodity linked. Crypto indices, because they are commodity linked. And as you can see, I was looking maybe for longs for Aussie Canadian dollar. When we go to the daily, you can see clear structures to the upside. We grab the liquidity all around here, and then eventually that is a big move, and we closed big time over here. So this is my point of interest. But it's okay that we see the pullback over here, because a lot of people get, as said, FOMO. A lot of people get FOMO and get involved with shorts, and eventually I think we can take them out eventually. If we have Canadian news by the end of this week, labor market data news, I think. If that data is very poor, then my expectations is that Australian dollar, Canadian dollar will maybe as target challenge these highs over here eventually. So yeah, for now, for today, be very conservative with Australian dollar longs, because we are in a risk of environment today. So I would not take a long today for Australian dollar, but eventually, when the dust is over, we can look for longs.
What,
I think.
Stephen, what do you think? Why are we in a risk-off environment, do you think, right now? For anyone who doesn't know risk-off, that means like when we've got risk-off, markets are not favoring riskier assets such as stocks or riskier currencies, AUD, NZD, CAD, which are commodity-linked currencies, or people are in favor.
Index, this is the fix. When we see big spikes, there you the fix. When we see big spikes, there you can say, okay, we are in a risk-off environment, and as you can see, this is the daily time frame. There's a big candle to the upside, and then you can relate it to the risk asset. So it's the fear index is it shows how much investors are worried about the equity market, the stock markets for the next 30 days. So if the
Yeah.
fix is high, it means people are scared and expect big price moves. And yeah, if the fix is low, then we are in a risk off environment. So when I saw this today, the big candlestick to the upside, then I looked to the equities. So let's look at the indices over here. As you can see, all red, and crypto is all in red. And then when we go for CHF, so CHF is bullish, and JPY is also bullish. Look at JPY basket is today bullish, because in the risk off environment, JPY, CHF will rise probably. And yeah, that's how I identified we are today in a risk off environment. But I don't know why. I no clarity for that.
Yeah, same. I couldn't find anything on that. One thing I'd say is, I mean, this isn't necessarily driving the safe haven flows at the moment, but US and China, I was looking into it. There's, how we had this trade truce, and it's going to lead me on to gold in a moment. And I'll share gold in a moment. But we had this trade truce with Trump and China, which is why one of the reasons why gold had started coming under pressure. But the thing is, there aren't any details okay, and what they're trucing about. Really, there's a lack of details, so it's very vague.
They try to get access in the Discord, but nothing shows. Once
Okay,
I'm in the Discord.
we'll take a look at that shortly.
I'm in the Discord.
We'll take a look at that shortly. After we'll take a look at that. I mean, guys, we had all sorts of freaking technical issues yesterday, so we're not we're not strangers to technical issues, but we'll get it sorted, of course. So, what's the crack with gold now? Let's take a look at this. Right, I'm still living in the past, calling this top. I'll still run with that. But anyway, gold's obviously topped out at all-time highs at around 4.4k, and obviously we're in a bit of a pullback phase. It's like how far are we pulling back, and when are we getting the continuation? Right now, obviously we have this consolidation. Let's just go on the 4 hour so we can see it very clearly. Okay, again, just consolidation, as you can see here, breakout, consolidation, and we're waiting for another breakout. And I believe, okay, I don't know, quite a few guys are aligned with me on this, but I believe that we're going to be heading into 3.8k. We've obviously got a bearish structure, as you can see, the lower highs and the lower lows, but we're just having a breather. Okay, it's not, as Stephen noted, markets don't move in straight lines. We have to pull back, we have to consolidate, we have to stop hunt, we have to do all that malarkey before we get a continuation. What am I expecting? I would love, in terms of what do I want, versus what's in terms of what's happening at the moment. We've obviously had some rejections around the Asian range high. We've got gold opening in around 90 minutes, New York Open coming into play as well. So maybe we get a bit of volatility. Perhaps we get that burst high that I want to see up here. And if we do, I'll be rubbing my hands together for shorts, because then it'll present a nice swing for me all the way down to 3.8k. That's what I would like to see, but let's see if that happens. I don't know. What are your views on gold, Stefan?
Right now I'm not looking for gold, man. Bitcoin,
Yeah, fair.
It's in the consolidation. It's not my favorite, so I'm not. It's not on my watch list for now.
But are you bullish or bearish?
For gold, let's take a look. So the overall structure is still bullish at the moment, but let's share my screen.
Yeah, mum.
Let's give my yes. So
Well, I think. Oh, sorry.
So
Well, I think. Oh, sorry. Just a quick one. Someone said, "What? So why isn't gold reacting to the risk off?" Because gold is what's the word I'm looking for here? Gold is it's exhausted. Gold's very exhausted at present. That's why we've got this mass consolidation. It doesn't, just because we've got a risk off move doesn't mean gold's going to follow. It's very exhausted. That's all. We've had a lot of explosive price action with gold, as you guys have seen, and it's just pure exhaustion. That's all it is right now. And as I say, at some point we are going to get that breakout.
Control then, and you could reach a little bit lower, but right now I would say this zone is still in control. For looking for longs, then we need to break above this high, and yeah, I I will stay away from gold, because some timing point you could see a big moment to the downside or to the upside. I see no clear direction till we break below this low. I would say, okay, now we can continue lower, or we need to break above this high and we can continue higher. For right now, for myself, we are in maybe on the low time from the 4 hour. Yeah, it's in the consolidation. So yeah, I'm not liking this price action. It's not my favorite.
Fair. Yeah. I mean, it's not. It's just consolidation right now. So, yeah, man. Okay, cool. Any other markets that you're looking at the moment?
Let's take a look. I was at Euro NZD.
Oh yeah. I missed your NZD longs. Damn it.
Yeah, man. This my swing low on the daily, and this is my swing high. And we said it, I think, 2 weeks ago. Just be patient. Eventually, we can look for longs. Right now, we broke eventually the 4 hour swing over here, and this is now my here was not strong for myself. And I would rather to see. preferably I want to see this push to the downside, grab this liquidity here, a little bit of a push to the upside, grab all the liquidity, all the early buyers, and then continue higher. But that didn't happen, and I have a next rule for, let's say, the 2-leg protocol. We go lower, higher, lower. Instead of making the new low, we are making a higher high. So in this leg, I was looking for longs yesterday, but yeah, I missed it. But yeah, still, the trade can come back. Can come
Fair.
back.
Fair. Fair, man. Let me just pull up. Just want to double check. Yeah, guys, just quickly, just obviously looking at the calendar for the rest of the week. Let me just pull this up. I'm not sharing my screen right now. I'm just quickly pulling everything up. But just as an educational lesson for all you guys, right? For people that don't understand, like central bank decisions. So keep an eye on this Bank of England one this Thursday. This will be a very good educational lesson for you. Okay, we had obviously FOMC one. I hope some people took some things away from what I said at the start of the stream, right? Where we're pricing something in and we don't get what we've expected, what we've priced in, then we see obviously the reverse reaction. So I want you to keep an eye on this as an educational lesson. Take some notes on the back of this Bank of England decision. And what I want you to try and gauge is, are we getting more cuts? Are we seeing? No, I think that's pretty. So guys, as well, so another thing that's weighing on pound at the moment is the UK government are across the board. So there's going to be a number of tax hikes for businesses and for consumers, for the everyday person, and it's not good because the UK at the moment is in a what's known as a cost of living crisis, where inflation's still relatively high. The economy's like in stagflation, where we have high prices, low growth, and then they're going to hike taxes. So that's obviously a negative for the currency as well. That's why GBP is getting pretty hit quite hard, specifically against the dollar right now. If you look, it's the underperformer. So that's also not helping the pound. So there's a lot of negatives around GBP at the moment, and I think that will intensify because that's also not helping the pound. So there's a lot of negatives around GBP at the moment, and I think that will intensify come Thursday, and it'll shape up. We'll potentially see some nice shorts through next week for a lot of these GBP pairs. Yeah, man. Just looking to see if there's any other markets that I like the look of at the moment. Let's have a look. Not really right now, to be honest.
No, somebody's asking about GBP NZD.
I'll get it up, but I'm going to tell you I don't like it, and I'm going to explain why. One moment.
Me either.
Okay, let me share.
CJ, when are we getting the Discord link? Yeah, you can join the free 30 days trial. The link is in the description or in this chat. And yeah, man, if you like it, you can stay. If you don't like, then eventually you can drop the subscription. It's up to you. But yeah, it's in the chat, man.
Let me share. Guys, the reason I don't like GP, starting off obviously on the monthly, structure is obviously super bullish. The structure is super clean. I mean, I'm sure you can see that yourself. These very clean higher highs and higher lows. Obviously a bit of a suspect candlestick there in the monthly, but it's not to say that we can't obviously continue to the upside. We have got this gap from a couple of weeks ago here, which we're obviously clearly trying to hunt and fill. So this gap, we gapped to the downside there. This gap was because of obviously the trade truce between US and China. Remember, trade truce is bullish for AUD, is bullish for NZD because obviously China's their biggest two-way trading partner. So anything bullish for China is bullish for Australia and New Zealand. So that's why we had that gap. But we're hunting for a gap fill. We haven't filled that gap yet. We're in process of trying to do it now on the weekly. Okay, the gap fill will be taking us above 231.30-ish here. And obviously, naturally, when we come up to gap areas, obviously we can face a little bit of friction. You can see we're facing a little bit of friction at the moment there with rejections there on the 4-hour. But you can just obviously see, just for point of reference, you know, these higher highs and these high lows right now. We're trying to grind it down. If we grind this down, okay, and I'll be a little bit surprised if we try and grind it down ahead of the Bank of England decision on Thursday. But if we grind this down, that's going to go clear. And then we're going to obviously, what we're going to do, we're going to go and print a higher high up here, probably at 236, the round number. So yeah, watch for a potential towards 236, okay? So that's just my take on it. But as I say, I'm not a massive fan of that one because obviously I'm a little bit bearish GBP at present, and I'm bearish NZD. But technically, it looks pretty sexy for continuation, similar to Euro NZD longs as well. So yeah, and a few sort of similar view there, Stefan.
Yeah, I don't like it either because GBP and NZD are both for myself bearish. I
Yeah.
will pick GBP over NZD, of course, but yeah, no, it's not. I would see a little bit lower prices than before continuing higher.
Mm.
But yeah, I don't like it right now. It's not on my watch list for now for this week. But if people looking for longs, I think I would pick. Yeah, no,
Yeah, fair.
I will pick Euro NZD instead of GBP NZD.
Exactly.
So
Now,
yeah, I will pick Euro NZD over GBP NZD for the high probability trade. For the high probability trade. I would do that.
exactly.
I would suggest that.
And just to add to that, right? So two things. One, obviously, if like macros are bearish in both sides of the currencies that you're looking to trade, it's one of those that you potentially do stay away from because it could be, even if the technicals are there, things could get a little bit messy, not clean. You want the divergences, you want the clear differences between the two. That makes a really, really nice trade, okay, and nice structure. Now, also what Stephen said was what he's noted is he's looking at Euro NZD as opposed to GP NZD because there's a better divergence there. This is what we do. We look at those clear divergences. Okay, if it's not there in GP NZD, it may be there in Euro NZD, or it may be there in NZD USD. So you pick your pairs wisely, something that I've said for many, many years, based on those clear divergences on a macro level, guys, okay? And don't go in a trade as Stephen is there, right? With GPNZD, he's not taking it. He's not comfortable. You have to be 100% comfortable. It has to be like, I place that trade and I'm confident this is going to hit. You just want to be fully.
Yes, yeah. We share our outlooks, right? In the outlook, we make it very easy the divergences and the high probability trades for the week. Where we look at, and I think that's a big education people can learn.
Yeah.
Because we look at the markets, but I also look at indices sometimes to crypto, but that's maybe once in a lifetime. But I look to like at the currency pairs, but you have a lot of currency pairs, and overall for the watch list, let's say for the upcoming week, for this week, you have maybe 5, 6, maybe even 4 pairs where you're looking at, because we look at the divergence. Yeah, man. Is there somebody else who wants to break us something down? The dollar interest rates decision for December has fear on investors.
What's that?
Hello, boss. Ken Chickbo, why is the dollar big bulls now? Give me a reason.
Yeah. I explained this at the start of the stream, so you'll be able to watch back here. Basically, markets were expecting Jerome Powell to be like, yeah, we're going to keep cutting rates, basically, and he didn't say that. He said that the December cut that markets are pricing in is not a certainty, so they may not cut rates. So that's dollar bullish. That's why we had this big bull move here, profit taking, and then the structure had been set because markets are now pricing out those rate cuts. Okay, they're pricing them out. So yeah, guys. But I think we've covered quite a bit of ground, obviously, on this stream. As I say, there's a link below in the description. I pinned it in the chat as well. So if you want to check out, but then there's going to be a set structure for the macro inner circle. So check that out. If you have any questions, obviously shoot me or Stephen a message on Discord. The Discord link is below as well, so you can get access to that. If it's not working, we will sort it out. But it's than that, guys. That's pretty much it. I don't know if you have anything else you wanted to cover, Stephen.
No, man, I think we covered everything.
Cool. All right, guys. Well, thank you for tuning in to the stream. Hope you found value in that. and we'll hopefully see you again soon. All right. Take care, guys.